we migrate back to your oil fundamentals under $90 a barrel? What are the trigger points or catalysts that break the ascent of oil?
So the catalysts really are very simple. They're called supply and demand, and we've got to get through the next few weeks to see whether there actually is going to be a driving season this summer. But underlying the differences of view is really what we think is raising prices now. And what we think are raising prices now are the dislocations that have occurred as a result of countries and companies refusing to take on Russian oil. There's no easy substitute for Urals. We're not in a one oil pricing system.
Right.
We're in a two oil pricing system. And we have to remember that while WTI may be at 120 or Brent may be at 120 something, Urals is trading at 30% lower than that. So it's not one clear market. And it's the disruption of that lower price that we have to think about and ask why we have these higher prices.
And I'm going to just say that we're planning a trip, Lisa, John, and I, to Abu Dhabi. And, of course, we're going to have an oil summit there. And we're going to have on stage Francisco Blanch, Christian Malik of J.P. Morgan, Blanch of Bank of America, you and other worthies. And the singular distinction seems to be the guess that hydrocarbon investment will or will not come on. If we get higher oil prices, are you more optimistic than others that investment will materialize?
Well, I think for starters, I don't think there's that problem. I think we have more than enough investment in hydrocarbons. I think we have a problem in the hydrocarbon world in that the United States, the short cycle big guy, has lost a lot of oil production. The U.S. was producing, we have to remember, 13 million barrels a day in March of 2020. It went down to 10.2 million a day. It's now at 11.9 million a day. It's well below where it was and where it would have been had we not had that drop in drilling. We would have been at 14.5 million barrels a day, and there would not be this problem. We have more than enough spending into oil and gas finding and development. It's shifted a little bit, but if we look at the next 2 or 3 years and compare expectations of demand and supply, we think the market is oversupplied.
Ed, have you seen any signs that demand is starting to cool for driving, for flying, that gives you confidence that perhaps we might not see the driving season that some people are expecting?
Well, we actually we're trying to observe that, and we decided to look at not only the 4-week average at this time of year for gasoline and diesel demand in the United States, and we went back and discovered at first glance that it was the lowest it's been in 5 years, other than in that big year of 2020 when demand collapsed completely. We've now gone back 10 years to find a time when demand for gasoline and diesel were as low as it is, and we had to go back to 2012, 2013. So if we think the EIA weekly data have a semblance of reality to it, gasoline demand is down year on year, diesel demand is down year on year, and it's the lowest it's been for a decade. And that's a sign that the price of oil has had an impact on where demand is going in what still is the biggest oil-consuming country in the world.
So, Ed, why did you end up shifting your expectations, your forecasts higher, if you still hold to that conviction that we might not see the driving season that a lot of people are saying we will?
Well, we drove prices higher, first of all, to market. We had second quarter results that are marking it to market higher than where we were at. And we tried to figure out what was really happening. What was really happening was that companies and countries were forswearing Russian crude. They could find no substitute for it. So they had to bid up the availability of light, sweet crude in the world that is not the same as Urals. They bid it up from the country that has the most amount of this, namely the U.S. with our open borders. And the fact of the matter is that U.S. exports have been booming. Our combined exports of crude oil and petroleum products in recent weeks have been at the 10.5 million barrel a day range. That would make the U.S. the largest liquids provider in the world, bigger than Russia, bigger than Saudi Arabia. That's up by a couple of million barrels a day from where we were. So when companies had to look away from Russia for diesel, where did they go? They went to the U.S. When companies had to look for crude oil, where did they go? They came to the U.S. And our inventories came down, giving a misleading impression that the whole world was going down in the inventory side the same way the U.S. is.
Just quickly, and I've only got a minute, and this deserves a much longer conversation, of course. How sustainable do you think that is politically? Because I don't think those numbers are that well known outside of conversations like this one.
Well, I agree with you. If it became political, people would start talking about stopping the exports, just as they talked about stopping the exports of natural gas. But it could be politicized in a way that it would be in an election year, with gasoline prices being as important as they are.